I hope you're excited. This is the first time we actually oh yeah, here is Sadia. Yay!
Hi,
Hi!
dear. How are you?
I'm good, thanks. How are you?
I'm great, thanks.
I'm glad you're doing this. Okay, people are joining. I'm glad they're joining on time. Um, okay, how's your week so far, Sadia?
It's busy. It's really busy.
Is it?
Yeah.
Is it
Um,
because of the online Skype consultations?
no, it's all the online recordings for the lectures and that. So,
Oh,
yeah, that's been, yeah. And you know how long those take?
that's one thing I don't miss.
Yeah, it's challenging because you've got to think about all the learners that you actually teach and like the possible questions that would come and the or four different ways of explaining a concept, and then maybe
Yes.
a screencast is better than explaining it on a PowerPoint voiceover. So it takes a lot to do.
I
It
can
really does.
imagine. I can
Yeah.
imagine. Okay, so everyone that is joining, if you just join, just give us a wave so that we know that you are here. And just remember, today we're giving away a tax legislation. So just like on my post, I did say that you have to join and you have to comment. And after commenting, you have to share this live to a friend, and that is how we'll select. We'll just randomly select. Actually, Sadia will select the person who win the the text legislation because she's more objective. So, guys, I know most of you guys now because you always DMing me. So, so yeah, Sadia will choose the person. Remember to just comment and share the link to this live to a friend, and then we'll be able to select the winner at the end. So today I'm excited because we are talking about something that I didn't even remember at all. At all. I didn't remember anything. So I'm glad we're doing this. And just like I said on my stories, guys, this will be like a mini high level revision because we'll be revisiting most of the basics, right, Sadia?
Yeah, so I'm not going into detail in terms of the nitty-gritty. It's just a very basic, high level where to start actually when you're looking at retirement benefits. Because I noticed that's the main problem. If you can't understand the basics, then when we get into the little nitty-gritties of things, people are totally confused because the initial base is not there. So it's just to give you an idea of what is a retirement benefit, what's the difference between the tables, and what to think of initially so that once you get into the very difficult things, it's actually easier to then figure out. So just remember, this is very high level. So you still need to go back to your tax legislation and your silk and your lecture slides, your tutorial questions, and consult with your lecturer. So you need to do all of that in order to really master the section. It's one
Yes, yes.
section that and it is one section that most students struggle with, but once you get the hang of it, it's one of the sections you'll absolutely love because it makes so much sense. So
Mm.
yeah, hopefully you guys all love this section after we're actually done with it.
Yes, yes, because I actually prefer that. I and some of the students have been DMing me saying that for the students who don't have classes now, they're saying they're struggling because they prefer to have that high level discussion with a lecture so that they put something into perspective. And once they have that big picture, they can then go back, do tutorials, go to Silk and everything, and put it together. But this foundation, the high level foundation, actually puts so much into perspective. So, okay, let's get into it. Um, okay, so for the people that joined, I'm just going to repeat this one last time because I don't want anyone to lose out. Remember to comment and share this with a friend so that you can be able to win a tax legislation. Okay, so let's start with the basics. What is retirement benefits and why does it exist?
Okay. So with retirement benefits, you need to understand why do we actually have it to understand why it's taxed the way it is. So think about when you retire at 55, 60, or 65. You're not going to have a job. So where are you actually going to get money for to sustain the lifestyle that you have? So while we are working, we are encouraged to put money into this retirement fund. That fund is there so that it's almost like a savings. When you retire, you can have money on a month to month, almost like a salary, so that you can buy what you need, you can maintain your lifestyle. You can actually do things and not have to worry on the government to actually provide you with a grant. I think the grant at the moment is what, 2.5 or 2? I mean, what are you actually going to do with 2,000 Rand? With the way cost of living is going and how high it is, it's difficult to actually sustain the lifestyle that you have. So we are encouraged on a year to year to actually contribute to these funds. And what happens is now, when you pull out from these funds, depending on when you pull out, um, there's actually a tax effect that happens, and depending
Mm-hmm.
on when you actually withdraw, you are either taxed on a higher level or a lower level, depending on when it is. So, when you look at retirement benefits, you need to think of the future. I'm putting in money for my future for when I retire. And if you think about it, right, 11 cap F actually fits into retirement benefits
Mm-hmm.
because SARS gives you that incentive to say, if you contribute to your retirement fund for the future, in a year-to-year basis, we'll give you a deduction. And obviously, there's the limits for that.
Mm-hmm.
Then when we think of retirement benefits, we also need to think of the type of retirement funds that we have.
Yes.
Because everyone hears of an RA, an RAF, a pension, a provident, a preservation, but no one knows what it actually means.
Mm.
So it's important to understand what type of funds there are available, who monitors and administers these funds, and how they actually work. So
Mm-hmm.
very high level, you get a pension fund and a provident fund.
Mm-hmm.
These two funds are employer funds. So when you join an employer, you'll see in your contract it says your employer will contribute 7.5% or
Mm.
10%, and you
Mm.
will also contribute to that fund. It's your employer helping you to put money in for your future. And similarly, you are also putting away money for the future. And the
Mm.
amount that you contribute in a year to year, you get a deduction in terms of your taxable income.
Mm-hmm.
Then you will get retirement annuity funds, which are not employer funds. These are like your Allen Gray, Old Mutual, those type of
Yes.
funds. And then we have preservation funds.
Mm-hmm.
Now, a preservation fund you cannot contribute to on a month to month. It's there to put money into if you leave an employer or when you retire, to preserve the funds that you've actually had in a retirement fund. And it's there, it's just kept as a safe keep so that you don't touch it. You can't contribute, but you can only withdraw when the time comes. So that's a very high level of
Yeah.
why we have retirement funds and why they actually exist.
Yes, that's a great summary of the high level view. I just want to ask something. You said usually when you exit the retirement fund, there'll be tax implications. So when you say exit, do you mean retire or do you mean when you just stop contributing to it?
No, so when I say exit the fund, I mean is, so let's put an example like if you resign from your company, you can no longer contribute to that fund because you're no longer employed with that employer. So you
Mm.
always get a notice to say, do you want to transfer the funds, keep the funds, or withdraw the
Oh,
funds?
yes.
So depending on what's going to happen, remember that if you decide to just keep the funds in that retirement fund, you can't contribute anymore. It just accumulates interest through the
Yes,
years.
yes,
If
yes.
you transfer it, you're either transferring it to your new employer or you are putting it into a preservation or another fund that you have. And if
Yeah.
you are exiting completely from the fund, as in withdrawing every single cent from there, then there are taxing implications there as well. So you've got to think
Mm.
about the three things that could possibly happen
Awesome.
when you resign. Yeah.
Yes, yes. So, guys, I would encourage you based on that overview, and I hope you have your pens and papers and you've been writing this down. So, based on that, if maybe you do have any questions, just jot them down so that when you study, you take into account what we've just said and the specifics that you're studying, and you just mesh them together. So we're going to do what we did last time. If you understand the overview, give us a high five. If you have a question, type it in the comment section. So, okay, we do have tax tables in this retirement benefits section. So can we discuss the different use of these tax tables?
Okay, so we've got two tax tables. The one is the retirement lump sum benefits table. Now, the best way to explain this sort of table is look at the first tax bracket in that specific table. So it's not the one that you tax for your income. It's the one that we use specifically for retirement fund withdrawals or due to death, disability, etc., or severance, or withdrawing. So there's two tables: is the retirement lump sum benefits table and the retirement lump sum withdrawal benefits table. Now, the best way to understand the two tables is you look at the first bracket. If you look at the retirement lump sum benefit table, it's the one that says 0 to 500,000 is taxed at 0%. In essence, if you understand that, what it means is that the first 500,000 that you withdraw from this fund is taxed at 0%, which means you get the full 500,000 in your bank account.
Yes.
Now, you can't use that table unless you are retiring or you have met the requirements for the severance, and that's the only time you can use that table. And I like to call that one the good table, because it's for those people that are good and don't take money out of that fund, or they actually preserve the money in a retirement fund for their future. So SARS rewards you by giving you a 500,000 rand sort of tax-free, if you think about it.
Yes.
The second one is the retirement lump sum withdrawal benefits table. So that's the one where the first 25,000 is taxed at 0%. Now, I call that the bad table because if you look at it, through the years, you are actually being taxed higher. So when you look at it, the first 25,000 is taxed at 0%, and then it goes up with the highest being taxed at 36%. So you are actually getting taxed more in the long run than if you just keep the money in your fund and actually just withdraw it when the time actually comes.
Yes.
So I call that the bad table because SARS actually penalizes you for taking out money before retirement, and therefore only gives you the first 25,000 at 0%.
Yeah.
So if you think about it from that perspective, it might actually make a bit more sense. And remember, if this sort of thinking works for you, please don't write bad table and good table in your test or your exams. You need to use the right name for it. So retirement benefits or retirement withdrawal benefits table.
So the students usually write that good or bad table.
Yeah. And then I guess,
Like...
and then the PGDA lecturer or if it's a repeat student that's doing tax C with another lecturer, they're like, what's good table and bad table? And I'm like, oh, no, this is what it actually is. So if you look at it, it makes sense. And that's just an easier way to actually remember which table do we actually use.
Yes, yes. So guys, I think this was a very good, clear example. We were discussing the different use of the tax tables, right? So Sadia discussed the good table as well as the bad table, of which the good table is where you are actually behaving the way they expected you to behave in relation to the retirement benefits. And the bad table is when you be naughty and you actually taking your money before the required period, and now SARS is punishing you. So if you understand that, give us a thumbs up. And I'm just going to go back to the comments we had on the first point we discussed on the overview. I saw two questions. So Moroma said, please repeat the Alan Gray example. What type of fund is it? Thank you. I think Sadia said Alan Gray is usually your retirement annuity fund, right, Sadia?
Yes. Yes.
Awesome.
Yes.
Awesome. Let's see, we had another question here. So Palsy said, in terms of death, what do we use in terms of death? Actually, do you understand the question? Because I don't.
I do. So in terms of death, when you die, even if you die before retirement age, you can't actually be penalized for dying. So what SARS does is, if you die, any money that is paid out from your retirement fund is actually taxed according to the good table. So the retirement lump sum benefits table, and not the retirement lump sum withdrawal benefits table. Because if you read the legislation, what it says, table is used um, when you reach retirement, if it's a severance event or on death. And death is one of those small proviso requirements in a severance. So when you die, you get taxed according to the good tables.
Yes, yes. Okay, I see Ogushe asked you to repeat the overview on Provident Fund, but Ogushe, what I'll do is that I'll save this live and then you can revisit it and you will see the explanation at the beginning. If you still have any further question, you can look in your notes or you can type out, because I'll be putting those slides on the feed. You can also type out your question there if you're still struggling. And yeah, we'll actually look at that. So Ogushe, I'll save this so that you can go back to that, and if you have additional stuff to say, we'll talk about it. So now let's move on to the third one, talking about severance benefits. What is a severance benefit?
That's everyone's main question. What is a severance? So if you go to Silk or Hopped, they actually have a nice little write-up as to what a severance actually is.
Mm-hmm.
Now, to put this into very layman's terms, a severance benefit is a lump sum, but it isn't a lump sum that's paid out of a retirement fund. It's paid by your employer. And it does not include accumulated leave. Accumulated leave, let's just touch on that for a second. Think about accumulated leave. You accumulate leave days when you work. So it's because of services rendered. Accumulated leave will never be taxed according to the good tables, because of the fact that it will always be taxed like income, and it will always be taxed according to the progressive tax tables. So whenever you see accumulated leave, you do not add it to your lump sum amount. You tax it according to the normal tax tables. So a severance benefit is a lump sum that is paid out when a person reaches the age of 55, or the person has become permanently incapable of holding their office due to sickness, injury, accident, or infirmity. So if something has happened to you and you can no longer do the job that you are doing, your employer might pay you out a severance to say, thank you for the years you have worked here. We are sorry we can't have you. Here's a lump sum amount to help you out. So in that instance, or when the person's employer ceases to trade or makes a general reduction in their staff. So when we talk about general reduction, we talk about retrenchments. So if your employer decides to retrench, you aren't asking to leave the company. You are just being made redundant, and therefore you are out of a job. So your employer would give you a sum of money to say, we are so sorry that we have to let you go. Here's some money to actually help you in the next few months until you find a job. So what SARS says is, we'll give you sort of a relief and tax it according to the retirement lump sum benefits table. So that's what a severance is. Please go and read on it in your legislation. It's quite nicely written and easy to understand. And also there's a little, what would I call it, thing to look out for. It says if you have shares in the company, you need to remember that small point and make a note of it. How much shares does a person have in a company? And that will affect whether an amount is not a lump sum in terms of the severance benefit or not. So please go and have a read on it. But the three main things is, if the person reaches the age of 55 and receives a lump sum, they cannot hold the office due to the fact that they are sick, injured, or incapable, or the employer has ceased to trade or makes a general reduction in personnel.
Yeah, that's a great, that's a very, very detailed explanation. So guys, we'll do the same thing. If you understand the third point on what is a severance benefit, give us a peace sign. And if you still have any further questions, comment below. I'm just gonna go to the second question, the second point that we just discussed now. I mean the third point, of which I saw we have a question from Kutlwano, where Kutlwano said accumulated leave will therefore be an inclusion in your gross income, of which that's what you
Yes.
said, right, Sadia?
Yes.
Yeah.
Yes.
Okay. So, guys, if you do understand everything we just discussed on severance benefit, give us a peace sign. And guys, I can't see the people who are sharing the live. So what you can also do is that if you are here to actually win the tax legislation, just comment in the comment section saying I need the tax ledge, and then at the end we'll actually revisit the people who said they need the tax ledge, and then we will actually choose among those, because now it's not clear. Okay, so let's go to number 4, where we're going to look at how to calculate and use the hypo tax. So what are we talking about here?
Okay, so hypotax is hypothetical tax.
Yes.
It's the tax that you need to calculate on amounts that were previously withdrawn or received. And we're looking at over your lifetime, what have you received before the current year of assessment? What is this hypothetical tax, or how do I put it? The tax that is said to have been paid to South. That's the
Yes.
tax that we are looking at. So you need to calculate the hypo tax, and it's something that initially everyone tends to forget to actually do, and then the calculation doesn't work out.
Yes.
So I'm going to touch on hypo tax again, but someone asked for the format of a calculation and how to actually calculate a
Yes.
severance benefit. So I've got it in steps, and Zanele will share this with you, and it's
Yes.
got a small calculation just to sort of help you out.
Yeah.
So I
Yeah,
call
guys,
it the
just to show you, I hope you'll see. So you see, Sadia sent me a detail, all the details that she's talking about. So towards the end of the day, I'll be able to put this into slides, and they'll be on our feed. So don't worry, you'll get this. But when you just see it on the feed without getting this background explanation, it's confusing. So I'm glad you're here, because by the time you get onto the feed and you consolidate what we spoke about here, as well as the information that is on the feed, is going to make so much sense. So yes, Sadia, you can continue.
Okay, so I call it the 6-step approach. So if
Yes.
you do the 6 steps, you'll most definitely come to the correct answer, provided that you are using it correctly. So my step 1, I feel, is the most important step. Now, when you do a calculation, you need to determine which table to use. So the situation that we are looking at in the current year of assessment, the table that we are using is the table that will be used for the entire calculation. So when you do a calculation, you use one table. You don't move between tables. So let's assume Zanele reaches the age of 65 and decides to retire. Right. Now, in the 2020 tax year, when she's receiving this amount, it's due to retirement. So I choose the good table. Now, for my entire calculation, I'm going to use only the good table. I don't switch between tables, even if the scenario has withdrawals for prior years. So choose the table and you stick to one table through the entire calculation. So that's step 1. Identify which table to use through the entire calculation. Now, in step 2, you need to identify how many withdrawals or transfers or situations or scenarios occurred during Zanele's lifetime. So you'll see that in the scenario, it'll give you maybe 4 or 5 events before the current year of assessment. Those events needs to be put in order of the earliest to the latest. So we'll look at, let's assume Zanele started working in 1999. 1999 would be the first year. Then we look at maybe 2001, and then 2006, and then 2015, and then 2019. So go in the order of the earliest to the latest and put it in that order. So order is very important. That's what they talk about.
Wait,
The
can I interrupt you there? You said we're going
Yes.
in an order. Is this the order
Yes.
of the events that affect our calculation?
Yes.
Awesome.
So when we look at all the amounts that were previously withdrawn or paid to Zanele, the order in which it started from the earliest to the latest.
Yes.
Okay.
Yes.
So, and that's before the current year of assessment. So the new year of assessment will come into play only after the next calculation, right? So let's look at an example that I've used. let's assume in 2010, a person gets paid out 50,000 Rand.
Mm-hmm.
Now, when we look at the 50,000 in the scenario, it will tell you that this person has previously not had deductions that were allowed. Now, when we looked at deductions that were not allowed, those are deductions in terms of 11 cap F. So remember, 11 cap F has a limit. If that limit is reached, the excess is not allowed as a deduction. That's what we are actually talking about. So you
Mm-hmm.
need to read the scenario and see how much up to that point in that withdrawal was not allowed as a deduction, and you deduct it from that amount that is then paid out. So in this example that I've used, I've said that 10,000 was not allowed as a deduction up until that specific year. So you'll
Mm-hmm.
deduct that. So can you
Mm-hmm.
see with 11 cap F, the amounts that were not previously allowed, at some point you actually do use them. It isn't gone to waste.
Yes.
Then I've used an example to say in 2012 they withdrew 100,000 Rand.
Mm-hmm.
So in that 100,000, they transferred 5,000 to another fund. Now you need to remember that when you transfer from one fund to the next, it's not taxed. So the transfer is basically going from one fund to another. Because it's not going into your personal bank account, SARS does not tax it because it's going to another fund, which is also being used for retirement.
Yes.
So all
Sadia, before you
amount,
continue, can I just say this? Because I see a number of people just joined just now. I just want to say,
yes,
guys, we are discussing how to calculate and use the hypothetical tax. So now, Sadia is looking at an example whereby there are different events. So there were different years where you were able to withdraw from your retirement fund. So Sadia is giving examples of for example, we just spoke about if you withdrew 10,000 and the deduction was not allowed, what would happen? So now Sadia is discussing an example of maybe now in 2012, you withdrew about 5,000, right? And you were saying if it's not coming to your bank account, then it would not be taxed, right, Sadia?
correct.
Yes, yes. So you can continue.
Okay, so the transfers, we discussed that. And then let's assume in 2018, there was 500,000 that was paid out. There was no amount that were not deducted, not allowed as a deduction, and there's no amount that's being transferred. So that 500,000 would be as is. When you do the add and subtraction, you'll come to a total amount over the lifetime of Zanele before the current year of assessment. Now, that amount that you get, that total amount, is what's going to be taxed according to the table that you've used or chose in step 1. Now, you put that into your calculation, and you'll come, if you do the calculation, you'll see that in step 3, this is the hypo tax that you are actually calculating. So the amount in step 2, put it into the table selected in step 1, that will give you your hypothetical tax. Okay. Now we leave that hypo tax for a moment and we go to step 4. Now step 4, we need to look at what are the amounts for the current year of assessment. I'm going to go on the example that there's only one amount being paid out for the current year of assessment. You need to make sure that where there are multiple amounts paid out, that you understand the requirements for that. It's too complicated to explain in a live. So you need to go and figure that out yourself. But I'm going to do this on a one payment for the year of assessment. So I look at what amount has been paid out in the current year of assessment, and I look at are there any transfers or deductions. So for my example, I said that she got paid out 900,000 Rand. 20,000 was not previously allowed as a deduction, and Zanele decided to transfer 300,000 to a preservation fund. So when we say 900,000 minus the deduction minus the transfer, it means that 580,000 is going to her bank account. Now that 580,000 is what SARS needs to tax. Now remember, when we do these tables, SARS does not say that you can start at the top of the table every single time. You need to look at what is the total amount at that point in time that has been taken out over your lifetime. So to get the right bracket, you need to add the amount in step 2 to the amount that you've got in step 4. That
Mm-hmm.
will give you the total amount that is paid into Zanele's bank account over her lifetime. Now we take that total amount and we move to step 5, where we then put that amount into the correct bracket. So you'll see you actually drop down right to the last bracket. And we'll say it's according to the last bracket, you put it into the calculation and you'll get an amount of 262,800. Now that's quite a large sum of money. And
Mm.
remember, in that calculation are amounts that have already been taxed at the time of whatever happened in the past. So as she withdrew, tax was actually being paid. Now, it wouldn't be fair to Zanele to pay 262,800 if she's actually been taxed before. So that's where the hypo
Mm.
tax comes into play. That hypo tax that we've worked out in step number 3,
Three,
we
yes.
deduct, yes, we deduct that hypo tax from the total amount in step number 5. So we
Mm.
say the total amount according to the relevant bracket minus the hypo tax, the tax that is deemed to have been paid when previous amounts were paid out, will give you the tax that is only payable on the 580,000. So you'll
Mm.
see that 580 gets taxed according to the correct tax rate, but you do
Mm-hmm.
not pay tax twice, in essence, so to say, on amounts that have previously been paid. And that will bring you to step number 6, which will then give you the total amount payable for the year of assessment. So if you follow
That's
these steps, it's actually quite easy to work out.
That's brilliant. That's brilliant. I don't even know if I should ask them to comment and say if they do understand it, because I feel like I have the advantage because I have the example in front of me. So guys, what I'm gonna do is that, just like what I said, I'm going to put this on our feed so that you have access to this example. And what I want you to do is that you actually take these notes that will be on the feed and also play this live, and you'll see, guys, it'll make so much sense if you do them on separate platforms. Like if you only read the example or you only watch this, it might not make sense, but watch this as well as whilst you're looking at the example, and you see, guys, you'll definitely understand it. But anyway, I'll take the risk and see who really understands it. So if you understand that one, because that was a 6-step process on how to calculate and use the hypotext. If you understand the 6 steps, just give us a smiley face. I hope someone does. But if you don't now, I know when you look at this on the feed and this video, you'll definitely get it. This, like, you really simplified it, Sadia, and it's, yeah, this is good. This is very, very good. This is very good. Okay. So now, you want to say something, Sadia?
No, no.
Okay, so now we are going to move to the last point before we take the questions. I see the questions coming in. We're going to move to the last point, and guys, just remember, I see other people taking their friends. This is great. You are sharing, but then what we're going to do at the end is that we will choose based on the people who said I need a text slash. So if you're just sharing with a friend or commenting and you still need a text slash, remember to comment I need a text slash. Okay, so let's move to the general points that students need to remember when doing retirement benefits.
Okay, so the first one is to read your textbook and to do the examples. The reason I say that is, even though it looks confusing and complicated, if you're not going to read the textbook, you're not going to understand what's going on. So read it in bits and pieces. Don't sit with it in one go. You're going to go crazy. So start with it on one part and then move on to the next. So maybe start with retirement lump sum benefits and then do retirement lump sum withdrawal benefits, or do what is the overview, then the deductions, then the transfers. So do it in bits and pieces so that you understand what you are doing, you read it properly, you do all of the examples, and you get a very good understanding of what's actually going on. The second one is to make a summary. Summaries are so important because it just condenses what you have learned. There's so much information. Some of it might not be applicable to you. Some might be things that you actually understand. So highlighting is important, but also making a summary is also very, very important. So when you look at a summary, you need to identify things such as when does the 1/3 lump sum and the 2/3 transfer come into play in terms of which funds does this is this fund applicable? When can you take the full amount as a lump sum and you are not allowed to do the 1/3, 2/3 story? Then we need to look at what type of funds can be transferred between which fund. So just to let you know, you can't transfer a retirement annuity fund to a pension or a provident. You can only transfer retirement annuity fund to a retirement annuity fund. So that's the things that you need to look out for. What are allowable transfers that give you that deduction where it's not taxed? Then we look at what happens in the event of a divorce. That is something a lot of students just look past and they're like, oh, well, I don't need to know this. It's a nice question to actually ask, and it's one that stumps people if it comes out and they haven't looked at it. So in terms of a divorce, who's actually taxed on that amount? Is it the spouse that's paying the money out of the retirement fund or the spouse that's receiving the money out of the retirement fund? And then we'll ask, what happens if a taxpayer receives more than one lump sum during the year of assessment? How do we then tax that? And it's very nicely detailed in your textbook, so you need to go and have a look at that. And what are the deductions that are actually allowed? And these are in terms of paragraph 6. So you need to look at what are the deductions actually allowed and how do we actually look at them. And please make sure that you read carefully, because sometimes lecturers or examiners confuse you by the way that they phrase things. So you need to just make sure that you understand what you are reading. And then if you can figure this out, I'm telling you, you'll really enjoy the section, and it's one that you look forward to in your test or your exam, and you'll actually get quite good marks for it, if not 100%.
Yeah. This was great, Sadia. So I'm just gonna, because I see other people are asking questions, but we've already addressed. So guys, remember, this will be saved somewhere, either on my YouTube or, yeah, I'll make a plan. I always make a plan. This will be saved. You'll find it. So I'm just gonna recap. Today we actually discussed understanding what is retirement benefits and why, and does it exist? What? Well, and why does it exist? Guys, my English just threw me off there. Okay, so number one, we discussed understanding what retirement benefits is and why it exists. Number two, we discussed when to use different tax tables, of which, yeah, this was a good one. Number three, we discussed what is a severance benefit. Number four, I really love this one because, yeah, I remember I used to be so confused and just take anything that comes, any table, and jot everything. So yeah, number four, we discussed how to calculate and use the hypothetical. We have 6 steps there that are very important, and we have an example that will be on the feed of Novalo Learning Center. So yeah, guys, I can't wait for you guys to actually see this. Number 5, we discussed the general points now. So okay, let me see if there are any questions that we haven't really addressed here. So whilst I scroll for the questions out here, please look at the people who said I need tax legislation, and then you can pick a winner. Guys, Sadia is the objective person here. I'm not gonna pick.
I've never chosen a winner before, but okay, let's have a look quickly.
Yeah.
I think I'll go on who's actually oh, what am I doing? I don't know. How do you choose? There's so many people, and I feel bad because I want to give one to everyone.
Why I picked on you, because I can't be the bad guy.
Actually, Yolanda has actually been asking a lot of good questions. So I think let's give it to Yolanda.
Is that Yolanda Mafo 21?
Yes.
Okay, so Yolanda, you are the winner. So just DM us at Nova Learning Center, and then we're gonna get your address, and then we'll book your book on Take a Lot, and then they'll deliver it. Okay, so now back to the questions. For the people who are here who haven't won the tax legislation, don't worry, guys. By the time the lockdown ends, I would have had many more giveaways. So we still have time. There's still some hope. Okay, so Stacy said, can deductions not allowed in the prior period be added to deductions for Section 11F? in the current period?
Yes. So assuming, let's say for the 2017 tax year, in terms of 11 cap F, you max the limit, and let's say there's 10,000 Rand that was not allowed as a deduction. So remember that will get carried forward. Then in, let's say, 2019, 10,000 wasn't allowed as a deduction. That gets added to the previous 10,000. So now your total not allowed as a deduction is 20,000. And remember, SARS has a record of this because when you submit your tax returns, this is all stored as data on their system. So you'll see that the amounts are there. Just a little FYI for those who do have amounts that are not allowed as the deduction, keep a record of it, because I've experienced in past with clients that when I was working at KPMG that um, sometimes there's an error on the system or the system doesn't calculate it correctly. Then you've got to make sure that you go back to SARS and ask them to fix it. So just something for in the future, always make sure that you have a note of it yourself, and also that you know how to calculate it, so you know it's calculated correctly, because computers do make mistakes. So yeah, just a little FYI on that. But yes, it does get added and carried forward up
Yes.
until the point that you use it. Then
Mhm.
once you've used it, it's 0, 0, and the deduction count starts again from 0 to the
Awesome.
years that you actually don't have.
Awesome.
Yeah.
Yes, guys. So, guys, I also see other questions based on what we previously discussed. You can see it when you actually play this again. And Oguhile. No, that is Ogushe. Yeah. Ogushe, you also asked a question similar to Stacy, so I hope this answered it. So, guys, this is the end of our IG Live for retirement benefits. I just want to thank everyone and congratulations to Yolanda for winning the tax legislation. Guys, this will make it to my YouTube channel so that you can be able to watch it at a later stage. And yeah, so I'll post these points on my feed and let's engage. Type out your questions. But remember, guys, sometimes you just have to go back to your silk and your lash before you type out the question, and it'll make more sense. So yeah, thank you guys. This was great. I'm sure we'll be doing another one very soon. Right, Sadia?
Oh,
I,
definitely.
I love having you here.
Yeah, I love doing that. It's quite nice actually. Just to
Yeah,
plus
it's
now
really
there's no
great.
lecturing, so the interaction is good. I
Yes,
quite
yes.
enjoy it.
Definitely. Okay, guys. So goodbye. Have a lovely, lovely Wednesday. Yeah, I'll see you on the other side. Bye. Thank you, Sadia. Thank you very much for that.
Pleasure. Okay, we'll
Cool.
chat soon, Vanilla.
Yes.
Bye.
Bye.